Hello, my name is Liz Ferty and I'm the Director of Programming for Pensions and Investments World Pension Summit 2020. And today I'm joined by Terry Heymann, who is Chief Financial Officer of World Gold Council. Welcome, Terry.
Thank you very much, Liz. A pleasure to be here.
Excellent. Well, thank you for joining us. Terry, can you tell us a bit about your role at World Gold Council and also you're joining us at the summit to talk about the transitioning pathway to a net zero carbon future and how that impacts the supply chain for gold. This is really interesting. I'm a big fan of gold. So can you tell us, first of all, what you do at World Gold Council and then this transitioning pathway?
Oh, of course, and delighted to hear that you're a fan of gold and I'm a fan of gold as well. And look, my role at the World Gold Council, I'm CFO and I do all the things you'd imagine around from a CFO's perspective of financial sustainability of the organization. I also lead on our membership initiatives and work very closely with our members who are the world's leading gold mining companies in thinking about what the future looks like and what a sustainable gold mining industry means. And climate change has obviously been an important part of that conversation. It's a really important issue for the investor community. It's a really important issue for the mining industry as well. And so in terms of the pathway to net zero, obviously all sectors of the economy are working towards net zero. The mining sector and indeed the entire gold supply chain is committed to be a part of that. And we certainly believe that the entire gold sector can get to net zero by 2050 in line with the Paris Agreement. We've done some work looking at where emissions are across the entirety of the gold supply chain with a focus on mining. And again, our members are the leading gold mining companies and we understand that aspect quite well, but also looking at downstream impacts and upstream. So downstream into fabrication, into bars and coins and jewelry, upstream in terms of obviously energy inputs and other inputs into the production of gold. And what we've found is that unlike many other commodities, the vast majority, we think over 99% of emissions associated with the entire gold supply chain occur in the mining and processing side. Okay. What does this mean? Well, it means it's really clear where you need to make progress. And if you can make progress in the mining and milling side, there really is the potential to get to that net zero by 2050. And what we're seeing is actually a lot of progress around that energy transition, the shift to renewables, the increasing use of electric vehicles, obviously storage technologies to support that, and actually a really exciting time in terms of the opportunity for the gold sector and particularly the gold mining sector to be at the forefront of decarbonisation, which is really what we all need as we're working towards this net zero target.
Interesting. Well, I look forward to hearing more about that at World Pension Summit. And I guarantee if you give me any gold to look after, it will be entirely carbon free. So gold has been a very interesting asset this year during the pandemic, certainly. So how do you see gold as an allocation in a pension fund portfolio benefiting or its position in a portfolio going forward?
Look, we have a very firm belief backed by data and please everybody go and take a look at the data that we put up on goldhub.com that really gives a very broad sense of the role gold plays in a balanced portfolio. And what we've seen, I think, over the last few months is that gold has performed very strongly, that gold has fulfilled its role, yes, as a safe haven asset, but more broadly in providing that portfolio diversification that gold is recognized for, gold is understood for. I think one of the things that isn't always appreciated is the returns that have been made in gold over various periods of time. And those are comparable, indeed better than many other asset classes. And of course, the liquidity. And in times like we've just been going through over the last few months, that liquidity is paramount and gold is extremely liquid. So those are really the reasons for holding gold and the rationale. What I think is interesting looking forward and thinking about climate change and thinking about how climate is going to impact the determination of an investor portfolio and how you incorporate a climate change lens into your portfolio construction. we actually think that the rationale for gold becomes even stronger. And some of the work that we've started, and we've got more to do, but the initial work demonstrates that gold is expected to be particularly resilient in light of climate change impacts, both the physical impacts of just our physical world changing and the transition impacts of various legislative and regulatory changes that are expected to try and mitigate the impact of climate change. Gold is very well proven as a source of resilience in portfolios, as we've just been talking about. Gold, I think, once you've produced gold, has very little incremental emissions and doesn't get impacted by what's happening in terms of climate change and some of those effects. So we think that there's an increasingly forceful case to make to consider holding gold as part of a portfolio to be a climate risk mitigating asset.
Mm-hmm. And so how would a pension fund or indeed any other institutional investor access gold? Because I presume you wouldn't need to build a vault at the pension fund HQ. Maybe you could, but how would they?
Correct. And look, there's always, I guess, that option, but it's certainly one that I'm not familiar with. There are obviously many vaults already in operation today, and it's absolutely possible for pension funds to have vaulted gold held on their behalf. Obviously fully allocated in the name of the pension fund. That's a very attractive option for many. There are also securitized products, gold ETFs and similar products that allow the convenience of having that direct exposure to gold, and these ETFs are fully gold backed, but with the flexibility that comes from it being an exchange traded product. And then of course there are ways that you can invest in gold beyond owning the metal itself, exposure to gold mining stocks, and a variety of other ways. Actually, there are a ton of different choices, but those three that we've just talked about in terms of allocated gold held on your behalf in a vault, securitized gold held through an ETF or similar instrument, or exposure to gold mining stocks are the most common ways that many pension funds choose to express their position in gold.
Great. Well, really interesting, Terry. Thank you for explaining all that. And we look forward to hearing more and continuing the discussion at World Pension Summit 2020.
I look forward to participating. Thank you very much.
Thanks.